welcome Ajay Thakur on board now. Ajay Thakur of Anand Rathi Institutional Equities. He's going to be joining us to talk about everything that's been happening in the paint sector. And Ajay, good morning and thanks so much for joining us. First up, we have to talk about the Aditya Birla Group, that foray. Now they're also entering the cables and wires segment. They've recently made their foray in paints also via Grasim and Birla Opus. Help us understand the kind of impact that move has carried out on other players, because now it's been quite some time, so we can expect to see some impact coming in. Tell us who has been affected the most and what's the outlook going ahead on that front.
Sure. So, like, if you look at the Birla Opus entry into the paint segment, we estimate roughly about 3.5% kind of a market share loss for the Asian Paint. And for the other players, mostly like if you look at Berger, Indigo, or Akzo Nobel, they haven't been so much impacted versus the Asian Paint. So, large part of the market share loss initially seems to be going away from the Asian Paints bucket. So that is something that we have witnessed. In fact, also if you're looking in terms of the margin performance over the last 9 months, we believe that roughly about 150 basis point gross margin impact and roughly about 400 basis point kind of a EBITDA margin impact is largely borne by the Asian Paint. Obviously, it is also related to the cost and higher ad spends that has been the implication on the Asian Paint.
Hi Ajay, this is Shrishti also joining in. But yes, indeed, it has been almost a year that Birla Opus has made an entry into the paint segment. But just in the recent earnings, Ajay, what we have seen is that the volume growth for Asian Paints and Berger Paints, those traditional players, that varied a bit. But going ahead, do you believe that maybe it's time for Asian Paints to make a comeback given their size and given their expertise? Or do you believe that some challenging times for Asian Paints specifically could persist a little longer?
So what we do understand is that there has been a market-wide slowdown in terms of the paint sector. Even if you look at it in terms of the Berger paints, their volume growth has been roughly about 4% versus Asian Paint, which was roughly about 1.5% kind of a volume growth. So the difference was much lower. Uh, Berger Paint has been already been always been growing at a slightly higher pace versus the Asian Paint in terms of the volume growth over the last few quarters, and that is reflecting in the market share gains for them. We expect this trend to be sustained. But if you're looking in terms of the Asian Paint itself, Asian Paint has been doing phenomenally well before the launch of the Birla Opus. We do see that they have already kind of garnered quite a bit of outlet reach, and incremental outlet reach, which was one of the growth drivers, is kind of slowing down for them. They're already reaching to almost 160,000 outlets just before the the COVID, they had been roughly having around 80 to 90,000 outlet reach. So they have almost doubled, in terms of the outlet reach. So that growth is kind of slowing down. But for Berger, they still kind of growing in terms of the outlet reach, which is kind of adding to their growth momentum.
Okay, point taken, Ajay. Also help us understand about the input cost, right? Because everything that we've been seeing playing around the crude prices right now, also on the back of some tensing up geopolitical relations over there, there's tension on that front as well. With everything that's been happening with crude, how do you think it's going to play out on the pricing front for these paint players?
So one shining point over here is obviously the gross margin and the raw material, which has been tracking fairly well for these companies. In fact, if you look at the crude and crude derivatives, has been trading at a much benign kind of a levels, and that is helping in terms of the gross margins. So barring maybe if you were to look at it in terms of the recent quarter also, most of the companies barring maybe the Asian Paint, we have seen gross margin being pretty.
I guess we snapped that line with Ajay for now, but definitely he was talking about how the volume growth has been impacted with respect to Birla Opus making a foray. But he also believes that the sector downturn is what we are witnessing right now has been making some impact. And we were also chatting about how the crude oil prices is impacting the paint industry margins and what is the outlook ahead. We'll try to get Ajay back, but meanwhile, let's also focus on Jubilant Food, because the company has come out with its its investor presentation, there are key commentaries coming in from that where they're saying that the 5 new food platforms will be built in the coming years. They are also talking about some of the new opportunities in terms of growth, and the total store count is also expected to reach to 3,000 by FY28 and presence in 700 new towns by FY28 is what Jubilant Foodworks is planning right now. That's the maiden analyst day today, so we will watch out for Jubilant Foodworks, and the stock is seen to be recovering a bit. But Ajay is back with us. Let's carry the pain discussion forward. And Ajay, you were just making that point with respect to how you see the gross margins moving ahead.
So yeah, in terms of the gross margins, I do believe that these companies are likely to benefit in terms of the lower crude prices. So a more of a stable kind of a gross margin is what I expect, uh, given the fact that the crude prices and most of the derivatives have been benign. So that is kind of a shining, a shining bright spot for these companies in terms of the outlook.
With respect to the valuations, isn't some of these leaders looking attractive to you? Because what we were seeing is that stocks like Asian, Berger, they are trading significantly lower now versus their 5-year average. What's your view there?
I don't think so. Frankly speaking, given the competition and the industry slowdown, I do believe that recovery will be the key to watch out for. And also in terms of the competition with Birla Opus kind of, already kind of shaping up well. They are on their way to almost reach a high single digit kind of a market share over by the end of this year. We do expect this will have implication on their on the margins of the incumbents. So that will weigh down on the margins, and also the fact that AkzoNobel is on the block. Any new player kind of entering with the acquisition of AkzoNobel can put further strain on the industry dynamics in terms of the pricing power and also the margin counters. So from that perspective, we remain kind of cautious from the valuation perspective. We do believe that this kind of valuations, while they look attractive on a 5-year basis, there could be further downside in terms of the earnings visibility, which could further put pressure on the valuations.
All right, so challenging times may be ahead. A lot's been happening with the competition heating up. But thank you so much, Ajay, for taking the time out and speaking with us and giving us a sense what's been happening within the paint
Thanks.
sector.
If you like this video, then like, share and subscribe to ET Now.